Hi, I'm David Schenck. I'm an attorney and enrolled agent, enrolled to practice before the IRS, and I talk about tax issues, estate planning, and asset protection. Today, we're going to talk about IRS penalties and interest. As you're probably aware, the IRS has many different penalties. There's the failure to file penalty when you fail to file your return on time, which is 5% per month. That's not a typo, 5% per month until you file the return or until the cap is reached. There is the failure to pay penalty, which is 0.5% per month, or 1/10 as much as the failure to file penalty. So if you're faced with a situation where you don't have the money to pay the tax due, it still can make a lot of sense to file that return and just don't send them the money and avoid the failure to file penalty. Both the failure to file and the failure to pay penalties are capped at 25% of the tax due. So the failure to file penalty is going to reach its cap 5 months after you fail to file, and the failure to pay penalty was going to reach its cap 50 months after you failed to pay, and they'll both then reach that 25% and stop forever. But interest on those penalties, as well as on the tax due, is going to continue to accrue forever. There's also the accuracy-related penalty, which is a whopping 20%. If the issue with your return is due to negligence, which is a failure to make a reasonable attempt to comply with tax laws, failure to exercise reasonable care in the preparation of a return, failure to keep adequate books and records, failure to substantiate items properly, or your return shows a substantial understatement of income, which is the lesser of 10% or $5,000. So you can see it's pretty easy to show a substantial understatement of income. It's not so substantial. Or a substantial overstatement of deductions. Under certain circumstances, the accuracy-related penalty can be as high as 40%. If, for example, the gross valuation misstatement rules apply. The defense to negligence is reasonable attempt to comply, good faith, following the ordinary standard of care. The taxpayer has the burden of proof to establish the reasonableness of any position taken. And this is surprising to a lot of people because, we watch television and we watch crime shows, and in court, burden of proof is always on the state to prove beyond a shadow of a doubt. But with taxes, the burden of proof is reversed. The IRS doesn't have to prove that you are unreasonable. You have to prove that you are reasonable. And you can prove the reasonableness of a position by using sources such as the tax code, legislative history, IRS regulations, court decisions, or IRS rulings, or similar kinds of authority. Also, seeking a professional opinion can be evidence of a reasonable attempt to comply. But if the professional advice is too good to be true, for example, if you consult a tax denier who says you have no obligation to pay any federal taxes, or you only have to pay federal taxes on foreign earned income, well, that's not the kind of professional opinion that's going to be evidence of a reasonable attempt to comply. The rules also provide that the IRS may not apply an accuracy-related penalty, those 20% and 40% penalties, to a position that is adequately disclosed. So obviously, you need to know that you're taking a controversial position in order to disclose it. So this is not something that's going to work for negligence issues. And you disclose your position by filing the appropriate form. Disclosure only is going to work if you have a reasonable basis for the position. You must cite reasonable authority that your position is more likely than not correct. Disclaimer: this video and any accompanying text is for informational purposes only. The information provided does not and is not intended to constitute legal advice. No attorney-client or similar relationship is formed. If you require legal advice, please contact an attorney or other legal professional. This video covers a complex legal area in just a few minutes, and of necessity leaves out much of the detail. Don't make decisions based only on this video.